DG Ravi Shankar can take.
So if you recall, during the pandemic, RBI managed liquidity in such a way that the call money rate, which is the operating target of monetary policy, hovered around the reverse repo rate. Okay, so that was like close to 335. So the lift of the rate has to start from 335. So the first stage of lift was to take it to the SDF rate, which was placed 40 basis points above the fixed rate reverse repo. That's why Governor mentioned not just the 250 that is done the repo rate, but the 40 which was done without the repo rate by just doing the SDF. That's why 290. And yes, rates need not always fall within the corridor. They sometimes fall out of the corridor depending on liquidity conditions. But the idea is to keep it as close, as aligned to the corridor as possible.
On the interest, on the rupee internationalization, we are seeing that interest. Volumes are not picking up as much, but I think those are teething issues that needed to be worked out. So the number of countries from which interest is coming is gradually increasing. The number of banks with whom accounts are opened are gradually increasing. The number of overseas banks who are opening those accounts are gradually increasing. So, the initial processes are on, they are encouraging, but this is, as all of you would realize, a long-term objective, and we have to build towards that. Thank you.
Trades have gotten done with rupee?
Beg your pardon?
People have actually exported and imported on rupee?
Some transactions have happened, definitely, yes.
You see, the stakeholders on either side, they're getting adjusted to it. It's a completely new paradigm for stakeholders, for importers and exporters from both sides, for banks on both sides meaning India and whichever is the country at the other end. So they're getting used to it. So it is something which we expect will improve steadily.
Yes. If I may just add, we are seeing a lot of official interest in this. Other central banks, other governments taking note of this and trying to talk and find out and explore the opportunities as well.
Thank you, sirs. I'll move on to Mr. Anup Roy from the Bloomberg.
Thank you, sir. Sir, you have said that this is a pause, not a pivot. Why not give, a more longer duration guidance kind of thing, and what will trigger the pivot? And also, sir, is your pause this time based on your internal assessment of CPI, since there has been concerns about overestimation of CPI in the last two prints?
No, nothing like that. The decision is mainly premised upon the fact that we have done so much in the last 12 months. We started our SDF action last year in April, and now we are in April. The rate action, repo rate came in May, and now we are in April. So it's just about a year. So we felt that it's now time to assess the cumulative impact of the actions which we have taken so far. And with regard to, the other part, giving guidance, if you recall in my minutes of the monetary policy meeting, I think it was last time, I had said that in an extremely uncertain environment that we are facing, it is not prudent to give specific forward guidance with regard to rates.
Thank you, sir. I'll
Sir, about that CPI thing, sorry.
Okay.
CPI?
Is your pause based on the CPI, your internal assessment of CPI?
CPI is the domain of NSO. We have brought to public sensitivity the issues therein, that if there is no price, there should be no, it should not be an issue of how missing, like when mangoes go out of season. There is no mango price quoted. So that should have been the approach. That's all we are saying. We are not going to tamper with CPI or assume that it will change methodology or anything like that. We take it as it is.
Thank you, sirs. Mr. Manojit Saha from Business Standard.
Thank you. You have said that on the stance, because there is a lot of discussion on the stance in the market also. You said the overall inflation is above the target, and given the current level, the present policy rate can be still be regarded as accommodative. Does that mean that until and unless inflation comes to 4%, there is no question of changing the stance to neutral? Because neutral stance could be interpreted as a dovish signal. That is one. The second is the inflation, domestic inflation depends on the pump prices. Does it give you the satisfaction that since pump prices are not responsive to the crude prices of 85 or 90, so a sharp increase from 85 to 90 to 95, even 100, the pump prices may not change because it has not changed when it was 70. So does that give you the comfort that even if there is a shock, that your inflation projections will not change much?
You take that.
So, just to answer your question in specific terms, this stance is valid up to 10 a.m. June 8, 2023. At that time, the governor will give you the results of our review of the whole situation, including forward-looking indicators. What was your second question?
The
Price.
Yeah, pump price. Yeah.
pump prices.
As you know, some time ago, the government decided to link pump prices with international prices. Okay, but that mechanism is now not in operation. So giving you this sense gives you the sense of the under-recovery of oil marketing companies, the likely hidden inflation, which can surface if it is aligned again. But it's just to give the public that awareness that there is this difference there.
And just to supplement one more point, when you make a certain assumption about the crude oil price, it basically reflects that your import bill for oil will go down and consequently oil import in value terms will go down. So to that extent, the net exports also get impacted. And net exports, is an important component of calculating our GDP growth. So therefore, we do take, we make certain assumptions about the crude oil prices.
Thank you, sirs. Before I invite the next participant to ask question, request limit yourself to one question, and if you have time, we will go for another. So I'll invite Anishka Kayastha from Hindu Business Line to ask a question.
Mike.
Good afternoon. The RBI has been asking banks to make additional provisions for top exposures. I wanted to understand, rather than leaving it at the discretion of banks, are you possibly considering a provisioning buffer to ensure there's an adequate and uniform provision buffer that banks have, especially given the transition to ECL? And a second quick question, if you'll allow me. The proposal for pre-sanctioned credit lines on UPI is very similar to the BNPL model. Is the RBI warming up to the model, and how will integrating it with the UPI network sort of help avoid the issues of the past? Thank you.
Okay.
No, I think provisioning, banks are required to make provisions for expected losses, and for the standard assets, they are required to make additional provisioning as based on their own ability to make provisions for standard assets. So that is something which has been already conveyed to them, and there is no change from what we have prescribed on that particular issue. As regards the BNPL issue or the pre-sanction, I think the guidelines is very clear. It is actually supposed to be a sanctioned limit into the account, and thereafter the transfer will take place. There's no real linkage to the BNPL concept as it stands today.
See, it's a pre-sanctioned credit line. That means the credit line has been sanctioned by the bank, and the customer can now operate it through the UPI. That's all that we have said. Ravi Shankar, you want to add something?
Nothing said. But I mean, that is the clarity. BNPL is just one type of transaction you're thinking about. Think widely. Think of UPI, which currently, involves transactions between deposit accounts or wallets, will now expand further to accounts on credit, on credit lines given by banks. So in a sense, you can actually, reduce the number of cards that you carry and do those transactions on UPI rails. So it's more than just what you mentioned.
But it's also that because a lot of BNPL players were also sort of pre-sanctioning loans and giving allowance.
I think the discussions we can, have it in the offline mode. Yeah.
Thank you, sirs. I'll move on to Mr. Piyush Shukla from Financial Express.
Good afternoon, Governor sir. Thank you, Yogesh, for taking the question. I actually wanted to talk to you a little bit about 81 bonds. A lot of 81 bonds have been presently issued by PSU banks. And after the Credit Suisse crisis, again, there was a debate on the sustainability of such instruments. So are we looking to provide some sort of feedback to lenders, especially the private ones, on their exposure to such bonds, number one? And if you could also tell us a little bit on the approach, Deputy Governor recently spoke about SRO being formed for fintechs. So what is the, I believe FACE has also come up with a proposal to the RBI for creating a SRO for fintechs. Can you just give us a guidance as to what is the progress on that? Thank you.
First question was? First question was? You see, the 81 bonds ecosystem in India remains quite robust, quite stable, and it is a part of the Basel regulations, and we have adopted that in our country also. And there is nothing more really I would like to say with regard to 81. When the banks market 81 bonds, the terms and conditions are given out, and the investors are expected to read the terms and conditions. The investors do know, and if you see, by and large, the large number of investors are basically high net worth individuals. And it's a part of the Basel regulation, so we have adopted it, and there is nothing more that I would like to add on the 81 bonds. With regard to the SRO part, individual application, if it has come, I cannot comment on that. You see, we, as a regulator, we also, have been from, this is not the first time we have talked about, SRO facility. We expect the sector itself, the regulated entities themselves, to take certain ownership and to decide certain micro aspects of going about their business. There are certain things which we prescribe on a regulatory level, at the macro level. At the micro level, we would like the SROs to play a more proactive role. Would you like to add anything, DG Rajeshwar Rao?
No, nothing right now, sir. No, I think Governor has covered it, so I don't think.
Yeah.
Thank you, sirs. I'll move on to Mr. Pankaj Ahe from The Informist.
Right, thank you. Governor, sir, with the MPC taking a pause on rate hikes, do we now see the RBI's monetary policy playing out more through the liquidity channel? That is one. And relatedly, 5.3 prediction of inflation, which is there in the public domain now, does the RBI somewhere fear that perhaps core will align to headline rather than the other way around? Sorry, will headline align to core rather than the other way around?
You take it.
Core has been stubborn for quite some time and seems to be driven more by supply side as...
No, our decision is until the next meeting. So that's standard practice among central banks everywhere. So you will hear our review then. As far as core and headline are concerned, we also have done a lot of research, and we find that actually headline aligns to core over a period of time. But it depends on specific circumstances. Like if there is abundant liquidity, headline aligns with core. But if there is a liquidity shortage, then it happens the other way around. Our sense is that both will moderate towards the 4% target.
Would you like to give a time frame for that? Broadly.
Until the next meeting.
Thank you, sir. I'll move on to Mr. Hitesh Vyas from the Indian Express.
Hi, sir. Good afternoon. Just wanted to check about new umbrella entity. Last February, you had said that evaluation process was on, but there has been no announcement. Just want to know why is there a delay in granting the license?
Yeah, we have had a look at the applications. You see, the objective was to introduce, through the new umbrella entity mechanism, introduce some innovative infrastructural value-add facility into the system, because our digital ecosystem, as you know, is already, quite active, quite innovative. We just wanted to bring in new ideas. We did not want something which is either incremental or a substitute of existing ideas or technologies. Now, of the proposals that we have received, we did not see, we did not quite see any innovative or infrastructural solution that that had come up. So, so that's where it lies at this point.
Thank you, sir. I'll invite Mr. Sachin Kumar from New Indian Express to ask his question.
Hi, sir. Good morning. You have mentioned in your speech that RBI is looking for a durable decline in inflation. So if you can please elaborate on how much fall in inflation will qualify as durable.
You see, durable means that it has to be a sustainable decline, not that ki one off in 1 or 2 months it goes down and again it goes up. So durable means on a sustained basis, inflation should go down and progressively align with the target. These are the exact words which we have used. So we will wait. We will see how it moves towards the target of 4%. Idea is to take it closer to the 4% target.
Right. Thanks.
Thank you, sir. I'll move to Mr. Shishir Shelar from Doordarshan.
Hi, sir. Shri here. So, just want your comment on the recent development where the RBI, where the IMF said that India has taken a good move as far as the digital payments are concerned. So, just want to, and also it's quite important because you have taken a decision today also as far as the great lines are concerned through UPI. So, want your comment on that? That what probably the future scope of digital payment in India that probably in pipeline, probably RBI is thinking of.
You see, digital payments have come to stay. And in the last few years, I think in the digital payment space, India has made phenomenal progress. During the last finance ministers, central governors G20 meeting at Bangalore, we showcased various aspects of our digital payments, including the UPI, the CBDC. UPI we had also just launched before, a few days before the Bangalore meeting, we had just launched this facility of enabling travelers from foreign countries to also utilize the UPI to make local payments, even though they did not possess, even though they do not have bank accounts in India. The linkage with Singapore Pay Now and RBI's UPI had just been also launched 4 or 5 days before the G20 finance ministers and central bank governors meeting. That evinced a lot of interest. Now, I think there is the phenomenal success of UPI in a large and populous country like ours has evoked a lot of interest. And I think going forward, already the RBI and the NPCI are in dialogue, in discussion with a number of countries to have similar arrangements as we have with Singapore, and to also enhance the footprint of the UPI. CBDC also, let me mention that the CBDC in the Bangalore meeting that is our version of the e-rupee, the central bank digital currency, was seen with a lot of interest. In fact, an eminent person from the international financial sector, he went to the extent of complimenting the design of our CBDC and added that the only thing he missed in the CBDC was the smell of a new currency note.
Thank you, sir.
I hope I got, okay.
Thank you, sir. I'll move on to Mr. Vishwanath Nair from BK Prime.
Governor, one of the criticisms of central banks during the unfolding banking crisis in the US and Europe was the quality of the stress tests that they were doing on these lenders and that they were not up to the mark. I want to, you've specified that Indian lenders continue to be healthy and that your supervision has evolved over time to nip the problem in the bud. But has there been any sort of tweaking of the stress testing that you do of the lenders in India?
I think you can take the question, you can supplement after that.
Actually, we have issued the guidelines to the banks that there should be a board-approved policy to use various scenarios to do this testing, not the single factor, even the multiple factor as well. As part of the FSU, the Financial Stability Unit, and the FSR Financial Stability Report, we do use various techniques to do the stress testing. In supervision also, we are keeping on stress testing of the entire portfolio on various parameters, not only the single parameter. So we do evaluate on various parameters. It's not basically required to be changed because whatever parameters were required, those have already been factored this present situation as well, like interest rate risk in banking book. So those kind of things are already part of our regular stress testing exercise.
Like to add?
So if you've noticed in the financial stability report, we do a exercise called interconnectedness, how interconnected system and how contagion can spread. So we do what is called this solvency contagion analysis, which we recently revisited, and we find that if we take the NBFCs with the maximum potential to cause losses, and there is an idiosyncratic failure of those NBFCs, there will be losses to the banking system, but no bank will go below the minimum capital requirement.
Thank you, sirs. I'll move on to Ms. Swati Bhatt Shete from Reuters.
Thank you, sir. I had two very small questions. I mean, one was the withdrawal of liquidity. You said that, it would be a multi-year approach. So I just wanted to understand if we would achieve the withdrawal of liquidity that you envisage by the end of this fiscal year, by the end of FY24. And so you had said previously that the 4% target on inflation would be met in the next fiscal year. As per your internal projections, does that still hold after the pause today? Thank you.
So, taking your second question first, the forecasts are all the information that we have put into that thing, and we do inflation forecast targeting. In the next round of our review, we will factor in the impact of this move, today's move. The moves so far have started to take effect. As you can see, credit is slowing. Rate-sensitive sectors are already showing the impact of monetary policy. Now, as we progress with this cumulative action, it is possible that the forecast path will change towards the 4%, which we hope. And that is what we will review in the next meeting.
But, as of now, does it still get achieved in FY25 or does it not?
Yeah, the baseline forecast suggests that we will reach to 5.2 by the end of this year.
Okay.
Absent today's action.
Okay.
Okay. The cumulative action of past actions going through still, what we have seen so far, they will continue to play through, and today's action will also play. So it might change the path of the inflation rate in the next meeting.
Thank you, sir.
The first question you didn't answer, sir. On the liquidity, will you achieve the withdrawal by end of FY24?
Actually, liquidity has already flipped. If you notice, we are already into repo transactions. The main operation became a 14-day repo, followed by a fine-tune. At the current time, the government spending is so much that the system is flush with liquidity. SDF has now gone up to nearly 3 lakh crore. So we will see as it goes.
Thank you, sir. I'll move on to Mr. Roisuke Hanada from Nikkei.
Hello. Good afternoon. The next week, the spring meet will be held in Washington, and I understand the governor is going to attend it. And what kind of the discussion do you exactly accept on that meeting, especially regarding the financial new regulation of the financial framework? Thank you.
You see, the spring meeting of the IMF will be preceded by the G20 meetings, and the points which you mentioned are expected to be discussed in the G20 meetings. That is G20 meetings of the finance ministers and central bank governors. We have highlighted and stressed our priority in the last meeting of the finance ministers and central bank governors, and taking into account the developments which have taken place in the intervening period, and also taking into account some of the legacy issues which are persisting from previous presidencies. In other words, let me say that taking into account the legacy issues which are still persisting from the previous presidencies and the priorities of our presidency, broadly we will discuss the following points. One, we will discuss about, and these are our priorities, these are the Indian priorities also. We will discuss about the recent incident of stress in the banking sector, in some advanced countries, to be precise, USA and Switzerland. Number two, making non-banking financial intermediaries more resilient. Number three, financial risks from climate change and the need for climate finance. Number four, macro-financial risks from crypto assets or cryptocurrencies or whatever you call them. Number five, managing risks from third-party dependencies, including big tech and fintech. Number six, enhancing cross-border payments. A point was made there. Number seven, better reporting of cyber incidents. Number eight, issues relating to financial inclusion. So all these issues are part of the priority of the Indian presidency, and they will be discussed at length in the G20 meetings of finance ministers and central bank governors in Washington, D.C., which will just happen in the preceding days of the IMF spring meetings.
Thank you, sir. So with your permission, last few questions I'll take before we close the press conference. So I'll invite Mr. Anand Adhikari from Business Today.
Good afternoon, Governor. So my question is on these small finance banks. Now, if you look at these banks, they are focusing on unsecured microloans, serving the non-salaried class. And even if you look at the geography, they are concentrated in smaller geography. And I've seen, if you see the kind of NIMs they are offering, it's much higher than the bank. So, they are able to offer higher deposit rate also. So deposits in a way are also moving, to small finance bank, even in a small way. My question is, don't you think this kind of model could pose a threat, to financial stability, not in the next 2 to 3 years, but let's say 5 to 10 years down the line?
Now, let me respond in a couple of ways. First of all, these SFBs basically converted from NBFC MFI. So earlier, there was a lot of concentration geographical as well as in the business. Now, there is a roadmap where they are diversifying, and it cannot happen overnight. So obviously, they require more time to really diversify. They are on the right path. Now, as far as raising the funds at the higher cost and offering the better NIM, we do track the business model of the SFBs. We also conduct the stress testing. And wherever we find that risk built up, we do advise the banks to take care of their risk built up.
Thank you, sir. I'll move on to Manish Suvarna from Money Control.
Thank you, Yogesh. Good afternoon, Governor, sir. So my first question is on the RBI's inflation forecast for FY22. FY24 is little change, despite a big drop in your crude oil assumption to $85 per barrel. Does this mean factors like monsoon and exchange rate are expected to make inflation management difficult? And second question is on this unclaimed deposit. So you have said that you are going to develop a web portal. So when we can expect that portal to be rolled out? Thank you.
You can reply the first part. Portal you can reply.
Yeah. On our forecast, the big change is actually in the second half of the year. Okay, and that you can directly link with what is happening right now. The high inflation of the current pay, yeah, exactly. Well, as I pointed out, that there is going to be a base effect playing. Because of high inflation now, you will get a favorable impact then. That is what has changed between February and today, because we got a print in between.
Portal. Regarding the portal one, of course, it's for the unclaimed deposits and accounts which are transferred to the DA fund, which is maintained by RBI, and we expect the portal to be ready in about 3 to 4 months' time.
Thank you, sir. The last question to the Mint.
Good afternoon, Governor. My question is with respect to transmission of rates through the banking system. There seems to be a disparity in the way the transmission is happening with most of the public sector banks, maybe 50% of their loans linked to the MCLR, whereas private sector, you see 50% linked to the EBLR. This is, which means that the rate at which the corporates, the rate of hikes that the corporate loans are getting priced at is much slower than the rate at which the price hikes are getting priced in for the retail loans. Do you think now this is the time for a sunset clause for MCLR? Because this is certainly a disparity between the corporate loans and the retail loans.
No, I think point which you make is the MCLR, the reset between the borrower and bank normally takes place at an interval of at least once in a year. So to that extent, the transmission may be slightly delayed. That is a point which can be noted. But having said that, I don't think there's any proposal being considered at this point to, provide a sunset clause for the MCLR.
Thank you, sir. With this, we come to the closure of the post-monetary policy if time permits, we have exceeded by 20 minutes of my scheduled time. So thank you everyone for participating in this press conference. I thank the top management of Reserve Bank, especially the governor and the deputy governors who made time to be with you today. Until next time, stay safe, stay healthy. Thank you very much.
Thank you. You can ask in the offline mode.